Hi everyone, this is Pete here. So I want to go through the Coinbase earnings very quickly because on Friday, Coinbase actually fell by 16%. Okay, so if you look at Coinbase share price right now, you can see it's a 16.7% drop. Right now, it's $314.69. Okay, so the key thing here is whenever we see a stock that we held, the share price drop by so much, the first thing to do is not to panic. Neither is it to ask about whether should I buy or should I sell, but is to take a step back, right? Stay calm, take a chill pill, and ask yourself, let me analyze the earnings and decide for myself whether is it truly that bad a news. Okay. So I want to go through the earnings with you guys today to give you an example how to look at the earnings without looking at the public news at all. Okay. I just want to look at based on the earnings, what was actually that bad about. Okay. So let's look at the earnings of Coinbase over here. And you can see on the quarterly basis, actually the overall revenue has gone up by a little bit, right? So not too bad. Okay. Otherwise, in terms of expenses, yes, expenses has gone up as well, but that is generally expected, as revenue goes up. The only thing that was a bit concerned is what I pointed here in blue, where the other operating expenses that are net, right, has gone up by almost nine times, right? From 34 million up to $308 million. So what went wrong here, right? Why did this go up so much, causing the operating income to be a negative operating income, right? So if you look over here under other operating expenses, which is in the footnotes, they talk about this thing called the data theft incident, right? So basically, they actually announced this back in May already, where there was a cyber attack on Coinbase, and Coinbase said that they're going to factor in about $400 million in costs, right, that they need to pay out. So actually, they actually pay out less than 400 million. It was only 306 million over, right? And right now, they are still investing the case. And so therefore, remember, firstly, is that this expense is not going to be an ongoing forever, keep on incurring 300 over million per quarter. It is a once-off event, right? So you should not be seeing this in the next quarter. So to me, it's hey, if this is the reason, then it's really not that big a problem, right? And if we look at the net revenue and we break it down, actually the net revenue did pretty decent, right? So consumer revenue, I would say, stay about the same. Total transactional revenue went down a little bit, but that's okay. However, stablecoin revenue has gone up pretty good, right? Blockchain went down a little bit, but it's okay. So all in all, the total subscription and service revenue, actually on a 1 year basis, has gone up as well, right? So when you look at the total revenue, it has actually gone up by quite a fair bit, right? From $1.44 billion or 1.45 to about $1.5 billion. Okay, so when I look at this, I'm like, hey, it's good. So why did the market react so badly? So that's when I went to the news and pull out what are the possible reasons. And over here, they say that, oh, while the subscription and service revenue has climbed to 665 million, which is over here, okay, and it's actually higher than 1 year ago. But they say, oh, but it didn't meet the expectations of 708. I'm like, what? So it actually gone up, but not gone up enough. So therefore, share price drop, huh? Okay, but never mind, right? So they say another reason is that the stablecoin revenue has gone up to $332.5 million, which is over here. Okay, but it missed the estimate of 363. So it's not really that they didn't grow, they didn't do so well, but it didn't do as well as the market thought they would. Okay, so that is one other reason. Another thing that I find very promising is that the stablecoin revenue has gone up, and I think it will continue to do so, helping the subscription and services revenue to further increase from here. So while they kind of didn't meet expectations here, but I think going forward, they will probably exceed the expectation. Why? Because they just partner one of the largest bank in the US, JP Morgan, to enable crypto purchases via credit cards. Okay. And with that, they can even allow users, okay, to transfer their Chase Ultimate rewards and convert them into USDC, which is the stable coin that Coinbase and Circle are issuing collectively. So I will expect the stablecoin revenue to be much higher from here. So yes, it did miss expectation this time round, but I'm not too concerned. Okay. Now, the next thing is that under operating expenses, I also noted that, hey, your transactional rebates and commissions has gone up quite a fair bit, right? In fact, it has gone up by 4.5 times, right? 450%. So I went to look down the footnotes and it says over here, higher transaction rebates and commissions, primarily reflecting an increase in rebates earned by institutional customers providing liquidity on our international exchange driven by growth in volume. Okay, so to me, this is absolutely fine, right? So basically, they probably ran a campaign to say, hey, we're going to attract more institutional customers to come to our platform to provide more liquidity because they can't be the only one providing the liquidity in the market. Okay, so they run a campaign and they say, if you come over here, we're going to give you some rebates, we're going to give you a bit of commission deduction and stuff like that. And they succeeded. Okay. So I don't think this is something to be concerned. It's just part and parcel of like, marketing costs, right? So I'm fine with that. Right. So I dig deeper and I wanted to see, is there any other problem? So I'm literally picking bones really. Okay. So over here, I noticed, okay, personnel expenses has gone down by about 3% year on year. So that's not too bad. Okay, but the web hosting and infrastructure has gone up by $19 million. Okay, so that could be the main issue, right? Why it fell by 16%. So when to look at the footnotes and see what happened, right? So over here, they say an increase in web hosting and infrastructure expenses driven by increased activity on our platform. Okay, so that's reasonable, right? So basically, from both end of the picture, they're telling you that they are seeing a growth in institutional customer volume and increased activity on the platform, right? So isn't that great news? Okay, right? Another thing, when I look at further expenses, I say, okay, there must be something that really got people very flustered. That's why it fell by 16%, right? So I say, okay, let me take a look at this. Okay, and maybe the related cost is quite high and stuff like. And I realized, no, not really. Professional services gone up a little bit, and it says that it's due to higher cost of legal advisory services, which I think has got to do with the one-off event, the data theft incident that they had, right? So I think this will probably fall back to the norm after this. And I realized customer support cost has gone up quite a fair bit, right, by 25 million. Wow, that's a lot of customer service there, right? And they say that, oh, an increase in customer support costs as a result of increased capacity needs. Okay. Our capacity needs typically increase in periods following higher trading volume. Hmm. All right. So one thing to remember is that a lot of the uh, transaction revenue, right, from commission that was done in the latest few months that may not have gone into the statement just yet, but maybe the expenses has already gone in because they probably need to hire these people earlier, right, in anticipation of their increased needs. So to me, it's like, hey, once again, I don't think this is absolutely a bad news. You are spending a bit more because your business is growing. So why is that a bad news? Okay. So we have yet to find a very significant news that kind of like should warrant a 16% drop, right? And I said that maybe it's in the cash flow, right? So I take a look at the cash flow and I see that wow, cash flow okay can be a bit worrying, right? The net cash actually went down by quite a fair bit, right? This is about $2 billion. And the culprit, so to speak, is coming from investing activities over here, okay, and also financing activities. So once again, taking a look at the statements, I went to check out and say, hey, what's happening here? What's happening here? Right? So overall, in terms of operating activities, they say that okay, operating activities cash went down once again because they factor in $253 million in cash, right? Which they voluntarily reimburse the customers. Maybe they lost some crypto over there. Okay, right? And they also use okay, $454 million to buy USDC because higher customer demand. Okay, so both sounds like, okay reason, not too bad, right? So I honestly don't know what is the main issue here. I honestly have no clue or any idea. Okay, so to me is when I look at finally I decided okay let me just go and check out the news and see what they say. Okay, and this is what I think is the main reason. They say that okay, for Coinbase when we announced the second quarter revenue of 1.5 billion, right, it missed the analyst's forecast, so, which is what we already know. But they say that this was actually a 39% drop in transaction revenue from the previous quarter, signaling a trading activity slowdown. So I decided, hey, okay, it's higher than a year before, but it is actually quite a fair bit lower than the previous quarter. So maybe there's some issue here, right? So I pull out the Coinbase revenue by segment throughout this whole period, right, by quarters, and I say, okay, let me take a look at June 30th, but just a year ago, okay, and March 31st, just a year ago, and I realized we are seeing the same trend. Okay. So do you realize that in March, it was also a much higher transaction? Okay. Right. The retail transaction seems to be quite a fair bit higher, right? Um, over here as well. And then later on in June, it kind of like dropped back down a little bit, right? So I don't think it's such a big problem, right? Um, I honestly don't think why they say that is so disappointing. In fact, I think the subscription services under the stablecoins part is going to be increasing from here, right? So all in all, I think this is actually quite a decent earnings for Coinbase, short of the the data theft where they have to factor in close to how much again? 200 over million dollars where they need to spend on it. But otherwise, I honestly don't think it's such a big problem, right? So I don't know, right? What do you guys think? Okay. So when I look at this, I'm like, okay, I don't see any issue here. And in fact, when I go and look back at the chart, right, and this is where we saw the 2024, right, same period. Okay. Actually, you realize it's a very similar trend, right? The moment the earnings is announced, right, then the share price drop. Okay. Okay. Right. So I don't know. And in fact, back then when I go and look at the news, it was also quite negative per se, right? So they say that, oh, Coinbase profit plunge, right? Retail traders lost appetite, right? They say the net income decline because of lower trading volume and stuff like that. So it is not something that's new to Coinbase, in my opinion. I think this is pretty normal, right? And when I look at the valuation, in fact, right now, because of the massive drop, Coinbase actually looks very attractive in terms of price to earnings ratio, right? So if you look at P ratio comparing to other exchanges, right? Exchanges, such as Nasdaq, ICE, and CME Group, actually it's about 28, Okay. And even if after I factor in, I say, okay, this is not fair because this includes like gains from like, crypto price going up, right? The security prices going up. So not very fair, right? So I decided, okay, let's just scrap out all those and let's just do a proper DCF calculation. Okay. So that's what I did, right? So I went to take their free cash flow on average, about $8 per share. I apply a discounted rate about 8%. That's usually my discount rate that I give. Okay. And I gave it just a 15% growth, which is, I think fairly reasonable, right? And I arrived at the fact that, hey, Coinbase actually right now is quite fair value. Okay. Right. It is relatively fair value. So I really don't see what is the big issue here. Maybe the reason is that, okay, previously it was slightly overvalued and right now it's coming to fair value. But all in all, I think this is actually not that bad earnings call for Coinbase. I do think it is a market reaction to it, right? And I would strongly encourage everybody here to really go and take a read at the financial statements yourself, right? If you have difficulty developing the conviction, because that is usually the best way to develop conviction is to look at the numbers critically and ask yourself, am I missing something? Okay, right. And overall, I think the broader trend for Coinbase, if you look at the chart over here, is quite healthy. This is the weekly chart, right? So maybe it does have some more room to plunge down, but I would take that as a great opportunity. Okay. So with that said, what is my plan right now is that I'm waiting for Coinbase to really kind of complete the drop. Previously, I thought that when they bounce off here, I want to buy a bit, but now it's coming down further. I want to see whether it forms a support level at the 100 moving average, perhaps, or maybe over here it'll be around the 20-week moving average. Then that's where I want to add a bit more. Okay. And I think also partly because on Friday, if you look over here, across the board, right, the market was down. Okay, so crypto pulled back a little bit. Nvidia fell by 2%, Palantir fell by 2%, and Tesla also fell by almost 2%. So everything was generally down by 2%. So with this news, Coinbase actually fell even more, right? So I think that 16% is just exacerbated by the overall market sentiment. But otherwise, I still like Coinbase. I think it doesn't change my view of this business. I do think they have a big room to run. I think it's going to be the world of either Coinbase slash Robinhood. Okay. If Robinhood is going to come in very big, a big way for crypto, then maybe it will threaten Coinbase. But so far, I would say Coinbase has a very strong foothold in terms of a bit of a retail and institution, right? Because of the stable coin and because of all the crypto, Ethereum, Bitcoin ETF that they provide the custodial services. Okay. If not, that's all I have for Coinbase earnings. Overall, pretty good, right? And I'll continue to monitor this and I'll push out more earnings analysts, right, as I finish reading the earnings report. Okay. So, guys, if you have any questions about Coinbase, do put it in the community forum, right? And then we can discuss from there. Otherwise, I'll see you guys on the live stream. Okay. If not, see you guys. Bye bye.